of 89.79 per dollar, which made the Indian currency 34 paise cheaper over its overnight close. Dealers blamed lesser supply of dollars from the RBI for the rupee fall. Latha Venkatesh is here with what she is picking up from the market. Latha, a big fall there on the rupee.
Well, the dealers at least tell us they don't have any fresh reasons. Probably it's yet again foreign portfolio investors pulling out, selling equities and taking dollars out of the country. It is possible that there is a slightly higher demand because the very strong GDP number indicates hints that probably there is no rate cut from the Reserve Bank. So further incentive to buy Indian stocks may not be there, and that's maybe making people go, or people are just taking position that maybe the Reserve Bank will not cut and therefore, people will pull out later. So, speculation is, people are just trying to outguess one another. Nobody is speaking of a very large FPI demand. It seems to be the usual demand, but it seems like the Reserve Bank has let go. Usually the Reserve Bank keeps supplying dollars, but once in a way it lets go. And there are various theories on why it is allowing, the rupee closed at 89.45 on Friday. It let go the 89.50 mark, which was a surprise. Everyone thought 50 was a line in the sand. Maybe because, once the rupee becomes cheaper, then the current account deficit will automatically correct because every imported item, the dollar is being multiplied by 90 instead of 85. So you will not import. That would be a natural market-determined way of checking trade deficit. There is another explanation that, when people are moving out, why should they move out multiplying it by 89? Let them get only 88 when they pull the dollar out. So the Reserve Bank is allowing the rupee to fall. There are all these kinds of explanations that are trying to reason why the Reserve Bank did not support as much as it was expected to support, why it did not support up to 89.50. The other explanation was also, again, more a running commentary on the market. There is something called a fixing. That is, month-ago contracts get rolled over. There is a particular time by which it gets rolled over. The explanation is that the Reserve Bank did not roll over all its sell contracts. And that also caught some people, on the wrong side. And they had to cover in a hurry. All told, the Reserve Bank is always of the view that we don't cut, we don't have a level of the rupee, we only control volatility. So you shouldn't be surprised with these one-off moves, which is more to trap speculators.
89.76, the intraday low. But Latha, also stay on and tell us if the strong GDP data is having an impact on the market expectations from the RBI on Friday.
Well, it did have an impact. The GDP number did have an impact on the bond markets on Friday itself. Remember, the bond market trade still 5 and the GDP number came in at 4. We saw yields rising by about 4 to 5 basis points across the curve. And today, again, the yields are up by another 1 or 2 basis points. I mean, the overall reaction has been more than 5 basis points. The fear in the market is that the Reserve Bank may want to keep the powder dry for a rainy day. What if there is a debacle in global markets and you want to help? After all, the fiscal window is also shutting. The government is in a mood to keep fiscal deficit low. So maybe the Monetary Authority should keep some ammo dry, is one view that the Reserve Bank may not cut. As well, when we asked our Citizens Monetary Policy Committee, that committee surprisingly voted 3-2 for a status quo. They said they do not expect or do not want the Reserve Bank to cut simply because, again, for the same reason, that growth doesn't seem to need. After all, the governor has said that low inflation has given us space to cut. But maybe he will say there is space to cut, but there is no need to support growth at this juncture. So the market is quite clearly, more fence-sitters have jumped to the side of a possible status quo, no cut, and that's pushed yields up.
So we'll have to wait and see what happens on Friday from the RBI. Thank you, Latha, for taking us through both those key triggers for the market. But moving on, Sriram Krishnan, the